Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel and something of an emergency video for you today. I had actually scheduled a great penny stocks video for you today, but got alerted to something yesterday in our Facebook group and had to get the word out. It all started with an email sent out by the Robinhood app, and more than just that email though, but a lot of what's been going on that makes me wonder if Robinhood investing may be a thing of the past, or at least not your best option for investing sites. Before we get started though, I don't want you rushing to close your Robinhood account. Even if the broker does go out of business, that doesn't mean you're going to lose your money. There are a lot of layers of protection for investors set up by the government and regulators. For example, the SEC under the Customer Protection Rule requires brokers and investing apps to keep client money separated from firm assets. So even if the company bankrupts, your money is still in those stocks and just transferred to another app. Also though, the Securities Investor Protection Corporation, that SIPC, protects your stocks and bonds for a value up to $500,000 with up to half of that in cash in the event of a broker failure. In this video though, I'm going to reveal what's changing at Robinhood, why it's not a good sign even if the app doesn't go out of business, and what you can do about it. Before we get started though, I've got to send a shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. So Nation, this all started with a post in our private Facebook group about an email sent out by Robinhood. Now that alone surprised me because I've still got a Robinhood account and didn't receive anything in my inbox. Granted, I have moved most of my money out to Webull, but I still should have been notified of those changes. So then I head on over to the app, I look around, and no press releases, no updates, nothing. So of course, since Robinhood has no customer service options except email, I ask for more information. Fortunately, I didn't have to wait the 24 to 72 hours Robinhood says on their email responses. I was able to get a copy from Rocco here, one of our hard chargers out there in the nation. So Robinhood is giving everyone about a month's notice that they'll no longer offer investing in closed-end funds, master limited partnerships, royalty trusts, and a few other investments here. And what gets me here is their explanation is a little weak. All they'll say is that they're in the process of phasing out certain investments. Now the email does say that you'll still be able to sell your investments in these if you hold them, but you won't be able to buy any more after January 11th. Now Nation, I'm not a fan of those closed-end funds anyway. They're ridiculously expensive compared to ETFs, and the leverage they use on them usually means they underperform over the long run. But MLPs and royalty trusts? MLPs are hugely popular and offer double-digit dividends. Energy Transfer alone does an average of 23 million shares traded on a daily basis. But this isn't just about the email or reducing those investment options for investors, but a lot of the other things that have been happening on Robinhood over this last year. In August, Robinhood shut down data sharing for sites like RobinTrack, which was an amazing resource just for seeing the most popular stocks on Robinhood, trends, and just that overall investor interest. Okay, that's fine. An investing app doesn't have to provide this kind of thing, but more transparency is always a good thing. More worrying though is the major 3-hour outage on Robinhood August 31st, the first post-split trading day for Apple and Tesla. And that lockout was in addition to the 21 outages on the app in March alone. Now in September, the SEC reported an investigation of Robinhood for failure to disclose its relationship with high-speed trading firms. You see, Robinhood doesn't actually place your orders directly. It sells them to high-frequency traders, but that's left the app open to complaints that investors aren't getting the best price out there, or these HFT firms are profiting by front-running those trades. And now we get this email, or should I say some investors got the email, because it seems Robinhood only sent this out to investors that already had some of those prohibited investments. Now the problem with that, and this is why I've actually moved most of my money off the app, is I want to say customer service, but it's really a customer respect problem. First, Robinhood has never had good customer service. When people's accounts were being hacked a few months ago, there was no way of contacting Robinhood except by email and waiting up to 3 days. And Nation, for a company that's received $2.2 billion in funding and just got another $460 million in September, not having at least a customer service chat line is inexcusable. But then to seemingly hide this change to investments without notifying everyone or even putting out a press release, it just shows a lack of respect for investors. And it's a big part of the reason why the Webull platform is eating Robinhood's lunch this year. Bloomberg reported earlier this month that Robinhood is losing thousands of investors to Webull, not just because of these problems, but the additional free stocks that you get and the analysis on the app. Now, even after a 10-fold increase in users this year, the Webull app is still much smaller than Robinhood's 13 million users, but I can just speak from my own experience in the features and customer service on the app. So I'll leave a link in the video description below. See for yourself. Now, I actually don't think that Robinhood is closing down or in any immediate danger. The app just got that new funding round for $460 million in September, and I actually think it's a move to improve costs ahead of an IPO. When I finally did receive an email response as to the reasons Robinhood is dropping these investments, it was basically just a copy-paste of the original email, so still hiding that reason why. And that's fine, a lot of people will still buy into that IPO, but there's still that bigger problem for investors. That Robinhood is giving you fewer investing options rather than more as it grows, that they've continuously failed to give investors the customer service they need, and seem like they're prioritizing their profits over good investor support and app function. I know that won't matter for a lot of investors out there, and I would give Robinhood credit for paving that way to no-cost investing apps as the norm. It's got a lot of work to go, though, to win back the trust of those investors. Click on the video to the right to see how I use the free stock simulator on Webull to test my strategies without risking real money first. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.